Mullen Automotive is back in the headlines today, and not for the reasons shareholders were hoping. The stock has plunged to around 6 cents per share following a bombshell announcement. The company has filed to register up to 200 million new shares of common stock for sale. Let that number sink in for a second, 200 million shares. Now, for a stock that's already trading at literal penny levels, this kind of dilution isn't just big, it's devastating. It signals to the market that the company is still in urgent need of capital. And it's doing what it has done so many times before, reaching for the easiest lever it can pull, printing more shares. This new S-1 filing dropped just hours ago. It states that certain selling stockholders, in other words, existing institutional holders or partners, will have the right to sell up to 200 million shares into the market. That means a massive increase in supply is coming. And when supply goes up, and demand doesn't, the price drops. Simple economics. That's why MULN has cratered to 6 cents. This news isn't coming in a vacuum, either. Mullen has already reverse split the stock multiple times to stay listed on the Nasdaq. Yet despite those splits, it keeps falling back under the minimum bid price. And now, we're right back in that danger zone, 6 cents a share and staring down the barrel of even more dilution. And let's talk about the volume. Over 100 million shares traded today. That's more than 4 times the average. Which means this wasn't a quiet move, this was panic. This was retail fleeing the scene, likely exhausted from months of dilution, false starts, and unfulfilled hype. This is also coming on the back of a class action lawsuit that's still ongoing, one that alleges the company made misleading statements to investors around past splits and deal announcements. The April 14th deadline to be lead plaintiff is approaching fast, and today's filing may only strengthen the perception that Mullen's leadership has not been transparent with its shareholder base. So what does this all mean? At a surface level, it means one thing: existing shareholders are about to get diluted once again. Each share you hold will represent a smaller piece of a company that, let's be honest, is still fighting just to stay afloat. And if history is any guide, those shares will lose value quickly as this new offering enters the market. Could there still be upside? Sure, this is a penny stock, and sometimes even distressed equities bounce. But the trend here is undeniable. Every time Mullen has needed money, it's turned to the same playbook: raise capital through dilution. And every time, shareholders have paid the price. This isn't financial advice. But if you're holding MULN, or thinking about buying the dip, you need to understand the risk. This isn't about a temporary sell-off. This is about fundamental erosion. The company needs money. The only way it's getting it is by taking it from the value of your shares. The sell-off today isn't some mystery. It's a reaction. A rational response to a company that just told the market, we're not done issuing shares. Not even close. Thanks for watching. If you're a MULN holder, drop your thoughts in the comments. I'd love to hear what your strategy is from here. Are you riding it out, cutting losses, or buying the chaos? Either way, stay informed and stay cautious.